Have you ever felt like your brokerage app has stolen shares from you? I see it all the time, or at least I see complaints about this happening all the time. And there's something that's going on that new investors usually don't understand. So in this video, I'm going to break down, is your brokerage app actually stealing from you, or is there something bigger at play? Let's go ahead and break it down. Now, I've had this happen several times where people will email me. I've seen it on Twitter, Instagram, public, and everywhere in between, where someone will wake up and say, oh my God, I've made so much money on this stock and I'm looking to sell. They'll go to their app, look at how many shares they have, and notice they have way less shares than what they did the day before. So what is actually going on here? 99.9% of the time, it is a reverse stock split. This occurs when a company reduces the amount of shares and increases the price. As an investor, just like a regular stock split, you have not made or lost any money. I'm actually going to show you how this works on the blackboard as well. This is a normal occurrence. At least a regular stock split is a regular occurrence. A reverse stock split, though, is usually a maneuver by companies that aren't doing well financially. And what they're trying to do is boost their stock price to make themselves look a bit better, when in actuality, they're really going through some issues. So let's go ahead and break this down on the blackboard to show you exactly what this looks like. For example, let's say that you have 100 shares of a company and you got it at $10 per share. That means that your total investment is $1,000. Okay? 100 shares, $10, you got $1,000 in this particular stock. And then you wake up the next morning after a reverse stock split, maybe you read about it, maybe you didn't, and you see this. You got 25-to-1 reverse split. Sorry, my handwriting is not all the greatest on the screen. Here we go. Try and fix it. And now you have just 4 shares at $250 per share. Now, notice here, you still got $1,000. It is still $1,000 at the end of the day. But imagine knowing you had 100 shares and you come back and you only have 4. Right? That feels like someone stole 96 shares from you, but the money is still the same. Okay? 10 times 100 is the same thing as 4 times 25. It's still the exact same thing. You still have $1,000. Now, why does a company do this? Number one, you may also feel, usually, or you'll see this, and I've had it happen to me as well, anytime a stock split occurs, I've actually done a video on Amazon where this occurred in my own account, and this is normal. On the day of the stock split, it's going to seem like you made 25x because it went from $10 a share to $250 a share. But after 2 or 3 days, the app will recalibrate and get your returns in the exact same spot that they should be. That is normal, and it happens almost every time any type of stock split occurs. Now, why would a company do a stock split like this? Normally, if you are a company that's on the New York Stock Exchange, which allows us to buy and sell shares, they usually have rules and a threshold as to what price that company must be listed at or above. If you drop below that, you're going to be in trouble. You could be delisted from the stock market as a whole. If that occurs, that means that people like me and you can invest in it. They can't make money. And it is a very difficult spiral if you are a company in that situation. So what do? If you are close to being delisted, as many companies have in the past, they do a reverse stock split, increase the price, and hope that people will continue buying and trading those shares and they can get themselves out of that spiral. That is what normally happens in a reverse stock split. If I own a company that is looking at a reverse stock split, honestly, I'm usually avoiding those types of companies because it usually is a red flag that, hey, something has gone wrong here and things are not trending in the right direction. I can't say that it's 100% of the time the case. The one exception I can think of, at least off the top of my head, is GE. That's one company that did a reverse stock split years ago, and they're doing well at present, at the time that we are talking right now. We'll see what happens to that company in the future. But for most of us, it's not a company that you want to be in. Now, if you're in one now, you truly believe in it, that's fine, but know that when you look at your app, the day that stock split occurs, it's going to feel like somebody stole shares. It's going to feel like you made a whole lot of money. You didn't. And that happens with a regular stock split too. When I saw that people invested in Apple when they did their stock split, or Tesla or Google when they did their stock split, people looked and said, oh my God, I've lost so much money. Let me get out of here. Something happened, because they did a regular stock split. Apple, for example, I think was 3-to-1. It was $300 a share. The next day it was $100 a share. And it felt like you lost so much money, but you really didn't. You really didn't, because they increased the amount of shares out there and they decreased the share price. That's it. All of these moves are all cosmetic. They're trying to entice investors to buy and hold on to their shares. Sometimes it can be beneficial if the stock seems cheaper, because more people feel like it is more affordable. And you might feel like, oh, yeah, I'll buy Apple at $150 a share, but at $300, you're like, oh my God, it's overpriced. I don't want to buy it at that price. When in actuality, it's just a 2-to-1 stock split. It's the same thing, right? But you feel more affordable. You feel like you can buy it at a particular price. For me, I've said this many times on the channel, I don't buy stocks that are $5 and below. Those are usually penny stocks. They're usually very volatile, and I usually just stay away from them. But if they did a reverse stock split and I didn't know it, and it just happened to be $25, I might feel better, right? And that's assuming I didn't do any research on it. And that's the other thing about this too. You have to research every single company that you own. You don't want to hop into something and not know what a reverse stock split is, or at least not know that it was going to occur. Because every company that is public that we can invest in, we usually put out a press release that they are going to do this months in advance. You can go back and check this channel when I covered every single stock split back in 2021, and you'll see that we knew these in advance. We knew when they were going to vote on whether or not they were going to do a stock split, what day it was going to happen, and everything in between. Reverse stock splits work in the exact same way, and you normally know in advance if you have done just a tiny bit of research for it. So 99.99% of the time, no, your brokerage didn't steal anything from you. It was likely a reverse stock split. Go back and just Google the name of the company, reverse stock split, and check the date. And I will guarantee you, I almost guarantee you, that is exactly what happened. So relax. That's not what happened. You didn't have anything stolen from you. It was just a reverse stock split, and you can carry on with your investing journey. Now, the next thing I'll ask you to do is you probably check out this video right here where I did a warning about what happened with the Amazon stock split, and you'll notice the exact type of complaint is there too. So you want to make sure that you watch this video next.